Is Melbourne back? In today's video, we're going to get a little bit deeper in terms of, is Melbourne looking to recover? Is it going to go through another big growth cycle? And also maybe some of the macro factors in and around what may or may not cause that. Guys, if you're not aware, my name's Julian. I'm the head of strategy here at Ripehouse Advisory. And we want to kind of get into this a little bit. My home state, still living there, proud to say, go the Magpies. But what we want to get into today is, is Melbourne back on the cards? We see an ABC article here that property values are tipped to reach a new high, and which of these states are kind of tipping that. And then we have a look at another one from the Property Investor magazine here, where the affordable suburbs are starting to drive the price growth here in Melbourne. And I guess the reason for that, we need to understand, we're starting to see a really strong recovery in the Sydney market. And the data from an advisory level, we've seen some really strong recovery in the Sydney market, and that's probably looked that way for about 6 months now. But some of those reasons, we went through COVID, and it's no, I guess, secret out there that your Sydney and Melbourne markets, they rely a lot more heavily than your external markets from migration, particularly migration regarding international students and international workers. Now, Sydney, not so much, but it was still a caveat there, and they went through their lockdowns. They had rising vacancy rates, but they didn't obviously go through the long, prolonged and repeated lockdowns that we had down in Melbourne. And that led to some really high vacancy rates. We were pushing the 5% number, particularly in the CBD. I was hearing reports that some of those big apartment buildings were having close to 30% vacancy rates in some of those apartment buildings because they're heavily geared towards international students. So the reason we're kind of starting to see that here, if we look in the Melbourne area, it's starting to say that it's driven off the back of affordable suburbs. And we go deeper into those articles, and a lot of them are down in the east. So they're mentioning here in the article places like Ringwood, you have Clayton, and you've got your other suburbs further out as well. And big reasons for that is the dynamic has changed a little bit. Vacancy rates in Melbourne are now starting to get to levels closer to other parts of the country, so down towards that 1% vacancy rate. If you're not aware in terms of the cycle of how those vacancy rates really come into play, so what will happen is we'll actually hit the highest vacancy rate period that we do every year around December time. Got people leaving the country, going back home, going traveling, ending their lease. December is typically the time where you reach your highest vacancy rate period for the year. Then what starts to happen is you get the migrants come in, particularly the ones in families. They're trying to get here towards the middle or back end of January. They want to enjoy a summer holiday here in Australia, but they want to get here before their kids go into school. So there's a wave then. And then there's another wave towards the middle to back end of February, where the international students pile in and they're going to be getting ready for their first semester of university. So you start to see your vacancy rates probably hit their tightest around that kind of March, April, May period. And we're obviously a little bit progressed on for that now. So those prices, they're bubbling away. But as it kind of alludes to here in this article, a lot of it is actually being driven by first home buyers. And why might that be the case? So if we come back a step and we go, well, we've had a lot of uncertainty in the construction industry, particularly that the worst hit have been Victoria and Queensland when it comes to builders collapsing. So you've got people falling over, and their confidence to go out and buy new home builds has essentially evaporated, and there's obviously long wait times on those new builds. So what do they do then? Well, they've been sitting on the sidelines hoping that these rising interest rates would see property crashes happen, and it hasn't really resulted. Even in your Sydney market corrected more than the Melbourne market. Melbourne was more towards that 5 to 7%, but a lot of those affordable suburbs were stable the entire time through that slump. And now that they've sat to the side and they're seeing that, all right, interest rates may have peaked, and they're looking to pile back into the market, and they're not necessarily looking to go into the new home build sector because there's still uncertainty there. They're now looking out and going out, snapping up established property. And that lack of supply, that squeeze will continue to happen. But there's also the rental pressure coming behind it. You know, in my local area where I live in Melbourne, I have seen properties that were renting for $450 a week in around this time last year. They're now at closer to $600 a week. That is a huge jump. In fact, that jump is actually the biggest in the country in the markets right now for rentals. Melbourne's going through that. So that will keep pushing on. I think it's going to relax a little bit come that December time. And then we'll see that continue to happen early in the next year. And that rental pressure will then start to pile over into house price pressure. But there's a big caveat to that. So investors make up a huge portion of home buyers. So if you're not aware what that number is, it's around 25 to 30%. So 1 in every 4, 1 in every 3 properties are actually investment bought properties. Now, it's no secret out there that there's some unfriendly tax rules and other regulations. You know, I guess Victoria is seen as the least landlord-friendly state across the country. So for there to be a massive price surge, there would need to be some, I guess, relax on laws and policies coming through. And I don't think we're going to see that. Even though that there's a new premier in place, we're still starting to see, I don't think we're going to see drastic changes. If anything, I think it might continue to go the other way, like we saw in other states, when other states had these rental shortages. And keep in mind, Victoria's not at the lowest that it will be, like other states went through. What did they do? They tried to blame those greedy landlords and I guess deflect that attention over to them. That will come even further in the coming months. I think you'll see in the new year that narrative will continue to get pushed. Not understanding that 70 to 80% plus of rental properties on the market, guess what? They're not coming from the government, they're coming from investors. So it's really easy to chastise landlords, but the fact of the matter is they're the ones actually putting roofs over most people's heads. So if I was to make a call, I think you will see Melbourne continue to increase, but that's just going to be based off that shortage of supply and demand from the rental side. But I don't think it's going to outpace other markets out there. That the fact that it's scaring off so many investors is still, even for me personally, why I will not invest in Victoria in the current market. And because of that, it's hugely driven by the fact that Victoria, as it sits right now, has very, very low yields in comparison to other parts of the country. As an investor, you want to be having your investment get you a return. Now, if it's going to get you negative return in terms of the cash flow, it needs to compensate that in terms of the capital growth. But we're seeing at the moment it's not outperforming other markets. I don't believe it will outperform other markets. The data in the advisory table is not really indicating either. So for me, though there are some exceptions to that rules, and we are buying in some regional centres in Victoria as a whole, particularly the Melbourne area, I believe that there's better opportunities out there at the moment. And hopefully, as a local Victorian, we start to see some recovery, but I think we might not see that until around spring 2024. Guys, thanks so much for watching today's video. If you did provide value, feel free to leave a comment. But if you could please like and subscribe and show your support, and also make sure to follow me on LinkedIn. We'll be posting more data and information reports coming through there soon. And also there's a huge project in the coming weeks and I can't wait to share it to you all. Other than that, bye for now and see you guys in the next video.